Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Let's take a look again on the gold market. Here as you can see that Fed statement has brought some math in overall performance and confuses the overall setup that initially were forming here. So currently on the first glance, on the technical point of view, we can't say that the initial ABCD pattern has failed, and actually it makes sense to consider the reaching of the COP target still, as we said in the beginning of the week, 1840, 1845. Area, which also butterfly here might be formed still as market stands above the C point. Upward action here was relatively strong. Here's also good acceleration if we wouldn't have this Fed comments, current situation could look differently. But unfortunately we've got it, and here some moments exist that not very good for bullish sentiment. First of all, daily trend has turned bearish. So you can see by the MACD indicator. So now we have the bearish trend on the daily chart. It means that maybe we will not get the crash of the daily bullish background, but it could take absolutely different shape. So initially our context is based on the bullish grabbers that have been formed here and suggest taking out of this top and reaching the COP, and intraday patterns such as a butterfly that still might be formed. But at the same time, here we see the risk that it might be ABCD pattern be formed and taken out of the C point. It means that the ABCD pattern, this one will be cancelled, butterfly will be erased, and we will have to watch for something different. Besides this, ABCD maybe will be not just the OP, but maybe the XOP that stands a bit lower. So it might be more extended, some kind of the garter steeple to buy. This will be absolutely different trading setup for the next periods, next weeks. That's what really could happen currently. And a lot of things now depend on non-farm payrolls release, because weaker report could support the current situation and support current context and trigger upward action again. That's why the situations very strongly depend on numbers that we will get currently. Because if we'll take a look at the 4-time frame chart, theoretically we have here a garter steeple to buy patterns. You can see with this AB equals CD has been completed. Market scoring around this area. Market still stands above these lows, keeping well at the butterfly as well. So it is a bit early to withdraw these patterns off from the table. At the same time, what I do not like is take a look that on the hourly chart, market has dropped inside of this trading range. It means that this range now stands open for a price action and could easily fluctuate around it and could return back to the lows, maybe challenge the lows, which is not good for patterns that we have in place. Second moment is that here we have extensions that stands outside of these lows. So first of all, this same ABCD patterns, OP has been reached, but market right now, as you can see, stands below the OP already and inside the previous trending range. This combination brings some risk. XOP stands below this area. Additionally, if you will plot here this larger ABC top D pattern, you will see the OP stands right at the same area around 1785, 1787, whereas the XOP stands. And with the daily bearish bearish trend, and on the bearish trend here on the 4-time frame chart, as you understand, chances that market could just show downside action here are not really small, especially when some support areas and bullish context has been broken with this collapse that we have. So it makes it a bit tricky here the trading, because if you were trying to take the long position here, if we wouldn't have the non-farm payrolls release, I would say do not take the long position by far. Wait for a deeper downside action. Maybe wait for daily pattern, larger garter steeple to buy or something of that sort. because technical performance, if we will not take into consideration the Fed statement, here looks bearish and it suggests deeper retracement. So it brings no hazard to daily bullish context by far, but it will make it different with the different patterns. But since we have non-farm payrolls right now, it could change the overall situation from top to bottom. And here, guys, you have actually, as usual, two options. First is trying to buy here on the gold with the stops below these lows, hoping that payrolls will be poor and market will show the upward action that lets you at least to move stops to the break even, or maybe it will trigger the real upward action back to this target, which is currently is possible because the lows are valid still. Or do nothing and wait. So in the case of the downward action, the downside breakout, we will keep an eye on the daily chart, what patterns will be formed there, and we'll see what will happen. Here, guys, I just plot the minor Gartner's triple to buy that has been formed here, but, well, I'm not sure that will be sufficient to reverse overall situation here. So that's a bit tricky situation on the gold that we have to deal with it today and make your choice what is more preferable to you based on your personality, some management style. So that corresponds to your trading plan. So and let's see what will happen when the numbers will be released.